Here we see engulf is happening at many places. Like first, this level is broken to a fake out means this was to trap the long position takers. Engulf and fake out. In short, we do not write complete. We sort in write them ENG, and fake out we use FO as the symbol. Okay, so now first we will look in bullish structure. So what is engulf? Engulf is simply when the price breaks, in general terms, whenever price breaks any level, call this engulf. Now please mute yourself. Okay, fine. So whenever price cross any level, we call it engulf in general terms, right? Like here it was a level, price goes up, cross this. Whenever this price, when this price cross this line, we call it engulf. So here the price engulf. Then price pulls back and goes up, cross this level, this H level. Again, engulf is created here. Price goes up, comes back, cross this HH level, higher high level. We again call this engulf. So here we see engulf is happening at many places. Like first, this level is broken to upside. We call this engulf. And G, engulf. Engulf happens here. First engulf happened here. We will change the color so engulf, right? Okay, engulf. Engulf, here is engulf. Here is the engulf. Then another engulf take place here. When this high broke into upside, another engulf happened here. And then again, when this higher high is broken, another engulf happened here. Okay. And when price came back and break this FL to downside, another engulf happened here, right? So did you guys understand what is the engulf in general terms? Okay, but when we had to trade, we focus on important engulfs, and important engulfs arise from breaking the important zones. So what are the important zone? In this structure, the most important zone is this FL. You know, FL is important zone. Why it is important zone? Breaking of FL gives us DP and swap FL. Means opportunity to trade, opportunity to enter a trade. So that's why when an FL is broken, we call it engulf in terms for trading. In general terms, every time price cross any level, it is called engulf. But for trading opportunities, we look for the engulf of important zones. So this is engulf. Then what is the fake out? If this is engulf, then what is the fake out? Fake out is also some form of engulf, but that engulf is a trap. How? We will see here. Okay. So here we have seen the price when comes here, it has to decide if we want to go up or go down. So this pull did a little pullback, creates a DP, fine, and then come back again, creates an RS and come back. So here engulf happened, right? Engulf of this FL happened, and here DP is created, right? And here RS is created, right? So what happens in this case, if this, after breaking this FL, if price doesn't goes back to this DP level, this is DP, this is DP. If price don't go back to this DP level in future, when price comes back, it will face in, we have two zones. One zone is here and another zone is here. So what price will do, it will come back and goes back again to this GP. This may react from this RS like this, but then again go back to this DP and then come out and then go down again. So what happened here? Price crossed this level. Do you see this? This purple box. Price crossed this level, but what happened? It went to the DP and fall down again. That means this was the fake out. Fake out means this was to trap the long position takers. Crossed this level, goes back to DP and came down. So engulf happened to this direction, so fake out happens to opposite direction. Remember this. Fake out happens to the opposite direction of FL. And this fake out is what traps the traders. Right? Did you understand the psychology? Price came down, breaks this FL, so it pulls back, what pulls back? It pulls back, goes above this RS zone, but fall down again. So the real direction of the price was to downside, but as the market is zero sum game, so this needed some buyers so they can sell to them and come down again. So that is why market movers take the price to above this level, means fake the price. This movement above was the fake movement, right? Do you understand the psychology of engulf and fake out, especially for fake out? If you did not understand, please ask. This is very important and we will use this throughout the intermediate and advanced level as well. Our whole RTM trading is based on this. Engulf and fake out. Engulf and fake out. This is how the price moves. Comes down, engulf, goes up, fake out, comes down again. When it comes down, what happens here? This engulf this level, engulfing this level, right? Engulfing this level or not? Engulf.
Yes.
This is engulf again. When price cross this level to downside, this is engulf again. What will happen? Again, this like of structure we will have to find out somewhere here. Somewhere here. right? Somewhere here we will found the structure somewhere here again, and then again the price will go up, creates the fake out, and then fall again, right? Here will be some zone like this. Again here will be some zone, price will go up again here, fake out this zone, goes up to some zone here, and then another fake out will happen. And this is how the price moves in the market. It goes in one direction to trap the traders and go in another direction, right? So we must find the right side of engulf and right side of fake out to stay in right direction. The whole game of RTM trading revolve around this, right? If you successfully find out engulf and fake out, you will always be profitable. If not, you will be trapped, right? Okay, right. Okay. Yes. Okay, okay. Okay, okay. So you mean if there is no RS, if there is no fake zone in historical point or in back side or left side, then what will happen, right? Okay. So in that case, it will create a fake zone first. How it will create? It will create in the form of can. We haven't studied the can, but I will show you how this will happen. So you mean like this. If there was RS, there was this zone. What will happen if price already hit this TP, right? So there will be a swap zone and there is no RS zone, right? Like this. We have already seen this is the swap zone, right? Fine. Okay. So price will come down here. What has happened? Orders were in this DP, but the price goes back again, hit this, came down. So what will happen? The order will be transferred from DP to this swap FL. We have studied that. Swap FL, right? So now the orders will be transferred from DP to swap FL. Why? The price has hit back to this DP. Do you understand now? Right? So you mean how we will decide how the fake out will be decided? Okay. So price comes back, engulfs something, right? So what will happen? So what price does, if this after engulfing, if this has already hit the decision point, what will happen? The order has been transferred from decision point to FL. So what price will do? It will create a fake level. How it will create? It will create a fake trend. How this will do? Suppose point price has come here. What it will do? It will create in the form of can like this. Price will go like this, like this, like this. Right? Do you see this? In classical technical analysis, what we call this? Price is creating what? Not can in technical, in classical technical analysis or traditional technical analysis, we call this trend. Price making high low, higher high low, high low, then again cross high low, high. So what impression this is giving? This giving the impression of the bullish trend, isn't? People draw trend line like this. Have you seen technical analysis, classical technical analysis? People see the price like this, a trend like this, going up, price going up. So what happens in that case? This will be the fake level. When the price has crossed to this level, this has converted to this level. What will happen? Price goes up, came back, could not break this low, then goes up again, then goes up again. That gives the impression of the bullish trend. So what will happen? Once the price cross this, buyers will enter here, pull back, goes up, more buyer enters here, goes up, and goes to this swap FL. Swap FL here is already true zone. Why? The order had been transferred from decision point to swap FL, and then price fall from here. Now do you see this? Either there was a level in history on left side to fake out, or the price will create a structure where it will give the impression of fake trend. This will be our fake out. Fake out of what? Fake out of this level. Fake out of this level, right? This can be one wave, two wave, or three wave, or just two wave is also possible. This is also same. This is also no problem. This can also be this, no problem, right? This can also be like this. Just one pullback is also enough. Goes up, pull back, goes up. This is enough to trap the traders. Once this level is broken, buyers will think the price is going back up again. So they will enter in trade, but they don't know this is the fake out happening, right? Now you understand? Any question again? Okay. And
Here,
this is why we call this technique reading the market. We are reading
one
the
question.
market.
Here can be
Yes.
created FTR.
What you mean?
Where is you put it fake out? There can be created FTR.
Of course, of course. Of
Okay.
course, we can have an FTR here at this level. At this level on lower time frame, you go, there will be FTR. No problem. There can be an FTR in lower time frame. Do you see this?
Yes.
Do you see this? Even there can be FL as well. How? You see that price goes up, right? Pulls back, right? So what is
Yes.
happening here? There may be a level here. There could be a level here. Here, when price cross this level, pull back, then what happens? An FTR is created, isn't created?
Yes.
When price pulls back again, goes up, this FTR converts in FL, right? When comes back, price may do the same thing again. Price comes back here, and this may create the FL, uh, swap FL again on lower time frame. Do you see this? Market is fractal. The
Yes.
same
Yes.
thing happening on higher time frame and lower time frame, same structure. So this is the basic building blocks of market structure, and you should focus on this, right? Any other question?
No.
Okay, anyone? No question, right? So we have got the idea of this fake out and engulf, right? Let's see this on bearish side. Okay. So when the price crossed this created the engulf. When price crossed this to upside, this created the engulf. Engulf happened. Price came back to the DP. What if did not came back to the DP? It will create the fake out here. But here we will take the example of the as a can, right? Came back to the DP, goes down, engulf, another engulf happened here. Okay, so now what will happen? Price comes down, goes up, comes down, goes up, comes to this level. What this movement gives the impression of the bearish trend, is it? Bearish trend. This will call be a bearish trend. But what is happening? A fake level is created here. If you guys have studied the concept of liquidity, the market needs liquidity to move. So what happens? Either it sweeps or take out the liquidity of left side or the past liquidity, or it creates the liquidity to move in a direction, right? So this fake out, and what this fake out is happening, this fake out is actually the taking out the liquidity, and inducement traders use different terms for that. We use the fake out terms for this, right? So this creates a level here and then fake it out, right? This fake out and then goes up again. So this will be our fake out. Fake out of what? This level. This level. Fake out of this level. Okay. Now you guys understand? Any question?
No.
Okay. So let's see. We will see some. Uh, on first day we looked at the minor FTR and major FTR. Right? Price goes up, did not come back to this horizontal line. So what we will do, we have data till 1 minute. So what we will do, we will draw this whole candle high to low as our FTR, right? This will be our FTR. You see this? This will be our, this whole candle will be our FTR, right? What happened? This our FTR, price goes up and came down again. Price goes up, came down again, and goes up again. I will write some here. Here what was high, right? And this will be the low of FTR. The whole candle, we took the whole candle. So this is high, low. What happened? Price makes goes up, price makes higher high here, right? So higher high here, pulls back, goes up again. So now what this will become? What this will become?
FL.
FL. This will become our FL. So this is now the FL. And then again price came down here, goes up. So now what this has to do? This has to decide if price go above this higher high or breaks the low, this low. Here is low, break this low to downside. And what happened? Price goes up but did not cross this higher high to upside and fell down from here. From here to here, what we'll call this then? Okay, this is the DP, right? This will be our DP. We call this DP. Okay. Then when the price came back here, focus on this area. When the price came back here, okay, right. So here you look at this DP. So when price came back here, it goes up to the DP, but if you see, this could not go deep inside the DP. Do you see this? If we divide this DP in 50-50%, 50-50% area, so do you see the price goes up? This the just entered to bit something 20 to 30% area, then fall back again. This happened
Yes.
or
Yeah,
not?
barely. It barely went in, barely touched, and
Yes,
then traded down.
yes, this is touching the just the below the 50% of DP, right? If it if this DP is you say 0 to 100, and if we draw a line and divide it in half, then you will see that it goes up, touch the DP, but did not penetrate to the around 50% area of the DP, right?
Yes.
So what we call this? We will call this RS. We call this is the RS. And what happened here? Engulf, right? We engulf here. This goes up, came down, then goes up again. Remember the structure? This creates lower low, and this creates our low, lower low. This was the low. Breaks this, makes engulf, creates lower low, pull back, goes to here, then fall down again. This creates the RS. So what happened? The this was engulf, came back, makes another engulf here, right? And here we have another zone here. We will discuss them in past, in future. As going too deep to past, it will confuse you. So focus on this structure only. Price came back here and goes up again and fake out to this level. Do you see this level? Do you see this? Goes up
Yeah,
and
yeah,
goes up and
sure.
fall down again. Here we fake out it, right? Fall down again, right? And what would have happened here? Those who don't understand what is going there, what they will do? They will see, oh, the price is crossing this level, they will enter here. Price is crossing this level, they will enter here. Price is crossing this level, they will enter here, and then trap, right? Especially here. They see this high, low, price goes up, cross this high, they entered here. That's why the goes up, price goes up, fake down, and cross this layer. Why?